Rajan Shah, Chief Investment Officer of Angel Broking, joins us right now on the show. Rajan, good having you. Thanks so much for taking the time out. Let's just jump to some of the stocks which are in news today, Rajan. Paucity of time. Coal India being the principal one. We just got the news about a 5% disinvestment, a buyback as well. The stock has jumped up to. What do you make of the announcement?
Well, I think, basically, it certainly is positive, but the intent is basically to raise funds. The government intent is to raise fund for itself actually. So, a 5% buyback in case of Coal India means, the market cap of Coal India is around about 2 lakh crore or so. And a 5% buyback means it will be using 10,000 crores of its cash reserves to buy shares, And obviously it will not be through open market method because in that case, it will be buying shares of the public, and the government stake would be moving up actually. Instead, it would be through tender method. And since the amount involved is 10,000 crores and since it would be through a tender method and since the public holding is 10%, the net proceeds to the government would be about 9,000 crores or so, So I think this should keep the stock in this range, 305, 320 kind of range, So certainly good way of raising funds for by the government.
Rajan, afternoon. It seems like all of the effort that the markets took to build up that kind of a rally came crumbling down by yesterday's comments from a political party. The fact that we're not even contingent now on the global market seems like it's a fairly dicey turf for the Indian equities.
Well, yes, the scenario is certainly, both globally and domestically not too good actually. But I think a significant part of the damage has already been done. If you see the broader market, in fact, many of the stocks are quoting below the levels at which they were quoting when the Sensex came crashing down to 7,800 levels in October 2008. Just to give an example, East India Hotel in 2008 October was quoting at 71 rupees. Today it's quoting at 57 rupees. So actually, while the Sensex is around 18,500, some of the stocks are quoting as if, the Sensex is at 8,000 levels, So the broader market has already seen, the damage. And you name very good companies are also quoting at that kind of absurd levels, Mahindra Forging, TRF and all that. Yes, but the frontliners are holding up. Probably we could see some selling in frontliners and that may pull down the Sensex. But I am not seeing a very big crack in the market from the current levels. And I think it's a great time to get into small and mid caps because they're quoting at very good levels, 5, 6, 7 kind of P multiple. They will test your patience. I'm not saying that you buy today and you will see the returns tomorrow. They will test your patience. But over the next 2-3 year time frame, I think, you should be able to make at least easily about anywhere between 50 to 100% kind of returns in the stocks.
I'll come to you on a couple of stocks that you had recommended earlier as well, Rajan. But before that, just a word on telecom because these stocks have just gone off and there are tons of pressure points on the anvil. Be it the spectrum pricing, be it the verdicts on 3G roaming, whatever it may be. And these stocks are facing the heat. What do you do with a Bharti or an Idea or even an Arcom which has got an announcement of late?
Well, my favorite in this sector has been Arcom actually. If you remember, a few months back we had recommended this stock at about 70 levels and so it did move to about 85 levels, came back to about 60 levels. Now it's back to about 66, 67 levels because of the recent joining of hands with Reliance and getting a fee of about 1,200 crores for allowing its assets to be used by Reliance. I think this development should actually maybe in the coming quarters even get more closer and maybe some more tie-ups could be in the offing for Reliance Communications. So my bet in the telecom space would be only Arcom, because I see a very decent upside in Arcom. The deleveraging of debt also probably may happen in the coming 3-4 quarters. And I think that should see the market cap moving up, So the only bet in telecom for me is Arcom.
Rajan, with respect to the news that came in on Adani Power with the CERC order, of course that came as certain positive news, but there are quite a few issues in that sector still, the fuel supplies, visibility of cash flows. Do you think that a lot more still needs to be done from the government's end?
Well, I think the CERC ruling obviously has been a big, sentiment booster for stocks and certainly a big booster, especially for Adani and, a lot of new projects of Tata Power and Reliance Power also in the offing. So the ruling is certainly positive for these companies. And yes, there may be certain issues, there are a variety of issues which are actually, around the power sector. But I think that this ruling is certainly positive for these companies, allowing the companies to actually raise prices if in case the cost escalates. I think that is certainly a very positive ruling. So I think it's positive, and I think we like Tata Power in this space, more than Adani or Reliance Power. I think Tata Power at about 95, 96 levels, I see very limited downside in this and a very decent upside. And recently one of its mega power plant also commenced operations. So we'll see the impact of that also in the coming year.
Okay, Rajan, just about 3 minutes left, so we'll make it very quick. Firstly, a word on a couple of stocks that you had recommended some time back, Fortis as well as Escorts. So they are probably a bit off from when we had discussed them. Good levels to enter, or you would avoid them?
Well, certainly, Neeraj, I'll talk about Fortis. I mean, we had recommended this stock at about 112, 113 on your channel. It's down to about 98 levels. I think a lot of deleveraging of the balance sheet is happening, and we'll see the positive impact of that in the current year, when we expecting it to turn around actually. So Fortis is certainly, still continues to be a good bet. Escorts, I mean, in the first quarter, Escorts is a September year end, so December was its first quarter. In the first quarter, despite stagnant growth, the company's profit went up 200%. And the stock was then ruling at 76, and it's come down to about 54 levels. I think there is a lot of irrationality in the market, and this irrationality itself is an opportunity. I mean, even in this quarter, that is January, February, March quarter, Escorts has sold the same number of tractors as it sold in the same quarter of last year, and I'm expecting a very good jump in its profits. So net Escorts this year should be expected to report about 7 rupees kind of earnings. Stock is at 54, which is just about 7.5, 8 times the earning. I think it's too cheap. I mean, you just need to buy, and maybe over the next 2 years, probably you could be sitting at 100% gains.
Rajan, can't let you go without identifying some of the other top ideas.
Well, as I said earlier in the show, East India Hotels. I mean, here is a company which owns 22 properties, has got 5 flight kitchens, and I was in Calcutta just about a quarter back, and I spoke to the company's chairman, S.S. Mukherjee, and during my interaction, I just casually asked what would be the approximate replacement value. He said nothing less than 9,000, 10,000 crore looking at the land prices. I mean, the company is quoting at a market cap of 30 to 100 crores, which is 1/3 of its replacement value. I am not saying that the stock should rally from 56 levels to 160. But what I am saying is that there is absolute irrationality and sanity needs to prevail, Secondly, you need to recall that 2 years back, Reliance paid 147 rupees per share to acquire 14.8% stake in this company. And you are getting the stock at 62% discount to what Reliance paid 2 years back. Also, you need to keep in mind that this stock is quoting at levels, at below the levels which were prevailing in October 2008 when the Sensex came down, crashing down to 7,800 levels, So I think, it's a stock which is as safe as a fixed deposit, but could give you 3 times more returns than what a fixed deposit would give you over the next 3 years.
Rajan, out of time completely, but thanks so much for the ideas. Always appreciated. Thanks for joining in as well.